Conference will now be recorded.
Hey guys, welcome to the weekly watch list. So we're gonna go into ES, S&P 500, and so potentially we can be in this downtrend here. We did gap down a little bit today as we closed Friday right above that weekly resistance support area and that 50-day. And then today we gapped underneath the 50-day and that weekly support. And we are now in between the 100-day and the 50-day. So we're in between that, and we're also in between the hourly support and the weekly support. So the weekly support is acting as resistance, and the hourly support is acting as support right now. So as long as the price could stay above this hourly support, it has a chance to push higher to 29.68, 29.88. And that's if it can clear that weekly support at 29.43.45, and which is basically also the 50-day moving average. Now, if we lose that 100-day and that hourly support, then we're going to come down here to 29.08. And if we lose that 29.08, especially 2900, that's, a green light for puts below to head to that 200-day moving average at 244 or 245, 28.45 basically. And if we lose that, we could come back down here to 28.17, 28.10, 28.10, the major target, as that's the weekly target. And if we continue this downtrending channel, we can be downtrending all the way down here to 27.50 still. Now, if we break above this 29.55, we can definitely go to 29.60. 29.60 is probably going to be right at that downtrend. So we could get to 29.60 and fall back down, but if we get above that 29.60 and we hold above there, then that's going to be breaking this downtrend, and it's going to be pushing on back over to 3,020. So we'll be watching that. So we've had this happen before where we have a strong push down and then a move higher and then a gap below. And I want to show you that here. So here we had a strong move down, a reversal, push up above the 50-day, and then a gap down below the 50-day, and then consolidate in between the 100-day and 50-day. And then we moved down, gapped up, and then moved down, and then moved up, and we're kind of like in this range. So hopefully we don't get back in the range like this, and hopefully we get some direction. Hopefully this is a downtrending channel so that we can get some direction to the downside. But we are going to watch these levels for the upside and the downside. So levels to watch tomorrow on ES, above 29.44 basically is bullish to 29.60, and above 29.60 we could go to 29.68 and 29.88. Now below the 100-day at 29.30, we're going to go to 29.08. Below 29.08, we could see 2,900. Below 2,900, we see 28.78, and most importantly, that 28.45. So we could go and drop there, hit that 200-day, and then bounce again back towards the upper end of the downtrending channel. Or we could consolidate here 1-2 days and then hit that downtrending channel and then sell off there. So a couple different options. I don't think we're going to have any big movements, as we're going to be waiting on news, as there's the China U.S. trade talks on Thursday and Friday. So might be in a range, maybe not. We'll see what kind of news comes out, as there are other items such as the impeachment talks and stuff like that. So let's look at how that looks on SPY. So SPY, its downtrend is a little tighter than ES. So this downtrend, it's already at the downtrend line here, and it is right above that hard resistance, which is that 50-day at 2293.94. But of course, after hours, it is gapped below that, and it's in between the 100 and the 50-day. So this could consolidate for a day or two and then push down if this downtrend is solid. And again, we've seen this push hard down with the gap down and then reverse and then gap up above the 50-day. Same thing right here as we noted in the ES. So we pushed down, gap down, reverse, pushed up, gapped up, and then had this hanging man here, and then moved lower, then back up and range bound, and then back up and then back down again into this range. So we're here in this range again, seeing what's going to happen. If this rejects hard and then we push down, we'll be coming here to this 200-day moving average at 2283.80, and possible bounce there to back up to 29 or 290, 291 area, and then we could move down again to 2800 and possibly 2380. So if this pushes up and we get above this resistance at 2294, we'll go break the downtrend and go test 295.80. And if we could get above that, then 298 is going to be very good resistance. And if that could get above that, we could go to 302.60. But these two are going to be very tough to get over, 295.80 and 298. There's less resistance to the downside. We still haven't hit this 200-day, which is at 283.80, which is very good support here. So I think that we should come back and test that and see if that holds. We might have to gap below there, as that is very good support. So we might have a gap below if it does get below, and then push to 280 and even more. But we'll see what happens tomorrow and this week, because we could consolidate tomorrow and this pattern will still be intact. The only thing, if it pushes, then this downtrend is gone, and then we'll have to see what's going on next, unless we start to consolidate sideways just like this. So looking at the VIX, as the VIX is opposite SPY. So we're looking at VIX, and we see that the VIX is in a bullish channel. It attempted to break out of that channel, but it rejected at this breakout point, and it reversed back down, and it's still holding that bullish channel. So we do have the 50-day crossing over the 200-day, so that's very bullish. And we are above this breakout. So that's very bullish still. So above 1670, very bullish. VIX is going to be very bearish only when it gets below 1580. It gets below this low of 1580, then that's very bearish for VIX, and it's very bullish for the market. So VIX still is in a bullish channel. It still can turn up. The weekly chart is still looking like it could pop up. It attempted, it got rejected, but we'll see, as you know, that's happened several times before, and it still pushes up. So we have a squeeze, and that squeeze is kind of turning up. RSI is looking bullish still. Same thing, RSI is above 50, looking bullish still. the squeeze fired off here, but it's kind of dwindled away on this one, but it could still turn green again. So we're looking at VIX here. If VIX loses 1580, very, very bullish for the stock market. But if it holds 16 and holds these moving averages and it continues up, then that's very bearish for the market and very bullish for VIX. So VIX can still continue to push higher and hit 20, 23, 25, and close to 30 area. So now let's look at some individual stocks that look pretty bullish even in this market, which is kind of iffy. So Lululemon had this nice big consolidation here, which was a lot of accumulation. Then it broke out and it's in this bullish channel here, and it's in a very nice bullish channel. Lots of buy volume, very low sell volume. If we look closer here, we were in a downtrend and we just broke that downtrend and we formed a reversal on the weekly at this lower end of this channel. Looks very good for a push higher. Looking at the daily, we have that downtrend, broke that downtrend to the upside. DMI is going to cross over green. RSI is above 50. We got a squeeze with momentum shifting up. So that's looking good, like it's going to pop and go higher above 200. So one to watch this week into next week and this whole month pretty much is Lululemon. You know, it might make a small push or a choppy push up, but it's going to make a push up higher, as that's looking really good. Buy volume is looking okay. Indicators are looking very good. Chart itself is looking great. Another chart that's looking really, really good that I've been talking about all the time is UTX. So UTX did push up to 140 area, but then it, you know, sold off, but it held this weekly support. It barely held it, but it held it pretty well. And we'll look on the weekly and see exactly. And we could see that it held it very nicely. So that UDX held that weekly support very nicely. We have a nice bull flag on there, and we have a squeeze setting up to the upside. RSI is looking good. DMI is not that great. It did cross over red, but we'll see if that switches this week. If it pushes up above 139.40, they could see 144 and possibly 150s. So reason why I like this one so much is because it still has this inverse head and shoulders pattern on it, has this double bottom pattern right here. So we have this W, and this W pattern typically says that whenever we have a double bottom like this, we're going to go back to the high. So this 144.40, we should push there to that 144.40 as long as this 132.90 holds. As long as that holds, we should go to 144.40 and more. So we'll see how that's going. And not only on the weekly does it have a strong squeeze, but on the monthly chart, it has a beautiful squeeze to the upside as well. Good buy volume, low sell volume recently, and we have that inverse head and shoulders, and that inverse head and shoulders would be very nice if it gets to 144 because it will almost complete the pattern. It will just need to break above that 144 to complete the pattern and continue on to 156. So this still looks good, still looks bullish. We had a reversal here with a nice bullish engulfing here, and this month is not over yet, so we'll see how that goes, if it pushes higher and breaks out or what have you. But looks good as long as it holds this uptrend and it holds these moving averages. We just had a very bullish crossover with the 50-day crossing over the 100-day. That's very bullish. So when that 100-day crosses, or when that 50-day crosses over that that 100 day, that's called a golden cross. So it's very bullish, anticipating the stock to go higher, move higher, at least back to 137 areas, maybe in this consolidation, and then push and break and go to 144.40. All right, next one that looks pretty bullish is well, can be looking pretty bullish is J&J. So J&J sold off really hard here on very high volume, and then started consolidating this box consolidation. And we can see there's plenty of buy volume in this box consolidation. Very low sell volume has been coming in and very high buy volume. And then we could see this with this bullish divergence here. We have a squeeze on the daily and a bullish divergence, lots of buy volume. We have it holding that daily support. If we break out of here, we could go to 137 and then 140. So that's looking very good on the daily. Looking at the weekly chart, same thing. We had consolidation sideways, lots of buy volume, and we're trying to break out of that range. Once we get above this 100-day moving average, especially that 50-day moving average, we should be able to get back to the 140s and maybe even push above that to 145, and maybe even take out a new 52-week high. So we'll see how that goes, but as of right now, J&J is looking very, very bullish. Once it clears that range here with these moving averages, this should push higher. That bullish divergence, squeeze, the buy volume, DMIs are green, and everything looks pretty good on this. We do have earnings coming up. See, earnings is 10:15. Okay, so that could be a possibility that it's going to have good earnings or not. I'm not sure. I don't really like to play earnings too much, so I would maybe play this after earnings, or leading into. It might be, having a bullish run into earnings. So we have about 9 days before earnings hit, as that's on 10:15, and it is 10:09 today, 10:10 tomorrow. Wait, I mean not 10:09 today. It's 10:06 today, 10:07 tomorrow. So we'll have about 8 days for it to run and see where it goes. So that was J&J, and then we have Twitter. That's looking pretty good. So Twitter on the weekly chart is in this bullish channel here. We have some pretty good buy volume, very low sell volume. We have low buy volume too, but the buy volume is higher than the sell volume. That's what I like to see. I like to see more buyers than sellers. So when this thing has a sell-off, very low selling. But when it has a pop, it has very high buying. Very high buying, very high buying. So I like to see that. So I like this reversal candle on the weekly, and on the daily, we are in this downtrend, and I want to watch for this break of this downtrend. I want that downtrend to break, and once that downtrend breaks, it tells me that we're going to go upper end of this channel towards 46. So that's a good sign. Once that downtrend breaks though, not before. We want to see that downtrend break. We want to get above 41.40. That's a crucial level. As you could see here, it was acting as strong support, and then it broke down. We want to see it get back above there and hold, and then push higher to that 43 area, and that 43 area is very strong resistance there. If we could get above that 43 area, it's going to 46 for sure. So looking at that and watching that downtrend, it looks good. We are at the bottom range of this channel, so we could still fall because we're still in this bearish channel on the daily, but I just like it because we're very close and we're forming a reversal on the daily, and we're forming a reversal on the weekly chart. So those two, and we have very low sell volume and very high buy volume. I like that a lot. Momentum shifting, RSI's curling up. So things are looking good for this to be a bottom right on the 100-day. So watch for that break of the downtrend and push higher to 41.50, 43, and then 46. All right, next one up is BA. So BA, it's actually looking very bullish in the weekly chart actually. So the weekly chart, we could see that from this whole area here, we been consolidating for a very long time. So from this box here, we consolidating, we try to break out here and then reversed hard, came back into this consolidation, and now we're above it and we're trying to break out again. So extend to the left, that'd be the gap fill. So here we are, and we have a bull flag on the weekly. DMI is green, RSI is green. We have a squeeze forming up. We have an uptrend making higher highs, higher lows. We're holding the 50-day on the weekly. 100 days up, everything's up. This is saying that it could push up to 400s again. So 402, 416, that could happen. So of course it needs to pop and break that 391, but it's saying that it can definitely happen. Now going to the daily, we could see that it's stopped right at that weekly support of 375.60, and it closed slightly above it by 10 cents. So you could see here it was acting as support, then we lost it, gapped down, then held that 200-day, and then pushed back up. We are seeing a possible golden cross right here on the 50-day and the 100-day. It's kind of fighting back and forth, but I think it's any crossover. I think BA is going to push higher and then and head higher. You know, even though it has all this bad news, it has a possibility, as we have our green DMI trying to cross over our red, and then we have a bounce here on the 50 and momentum slowing, but I think this could move up. Now if it rejects here at 375.57, then it's going to reverse and come back down to 355 and 346. But everything's looking pretty good for the upside. If we look at the past, we have a high buy volume, very low sell volume. So we do have a couple spikes of sell volume, but we have more buy volume spikes than we have sell volume spikes. So, you know, even though it leans to my direction of not going bullish on BA because of all the negative news and its planes being grounded, it's just the fact that everything's looking bullish on it. So you can't fight it. You can't fight it. It's looking bullish, at least recently. Back here looking really bearish, but these past maybe 1, 2, 3, 4, 5, 6, 7 weeks, this past 7 weeks, it's been looking really bullish. So BA could push on to 400 and 416 and fill that gap on the daily here, and hit that 416 in this next couple weeks, maybe by the end of the month, or sooner. It could push on up. It could happen within the next 2 weeks. So we're watching that. Maybe it consolidates a little bit more, but I think that it can definitely push that above 375.60. I would be bullish and have that as a stop loss, or have the 200-day as a stop loss. If you're a little more risky, then use that 200 as a stop loss. If not, then use that 375 as a stop loss, because this can definitely come and push higher. All right. So we went over SPY, went over VIX, we went over ES, we went over UDX, we went over Twitter, Lululemon, J&J, and BA. I'm still anticipating the market to be bearish, even though I've seen all these individual stocks as bullish. I'm still leaning bearish on the market only because of the situations here where, we're very, maybe we don't break down hard, maybe we just consolidate in a range again and chop around, but I don't see us going back to the highs. I really don't. All this sell volume, I mean, all of this sell volume here, this sell volume spikes and this low buy volume, low buy volume, people keep making excuses. Oh, well, the algorithms are making it sell. Well, let me put it to you this way. On this day, we had about 90 million sells. This day we had 124, almost 125 million sells. Okay. Here we had 86 million buys and 66 or 67 million buys. Okay, those two don't add up to these two. Okay, so there's more shares being exited than there are being bought. Simple fact. Okay, so until that changes, I can't say that we're going all-time highs, because if more shares are being exited than are being accumulated, then how are we going to go higher? Just not making sense to me. So we exited almost 100,000 shares there, um, exited about 50,000 shares there, exited 100,000 shares there, bought 74,000 shares, exited 60,000 shares, exited 85,000 shares, bought 50,000 shares, exited 90,000 shares, exited 125,000 shares, bought 186,000 shares, bought 66,000 shares. Too many shares exiting, not enough buying. I can't support all-time highs. Sorry. So I'm gonna lean to the downside on SPY and the market, and we'll see how it goes. So happy trading, guys.